I guess we're going to start off with copper. It's been a metal that's really in focus, and while the short-term outlook may be challenged, particularly in the light of a possible recession or at least a global slowdown, the medium-term outlook is still pretty favorable. And most people I speak to are positive on the outlook, particularly with its role in decarbonisation. And the key question I get asked is, how is the mining industry going to fill this potential supply gap, particularly as we get towards the end of the decade? And a key question that comes up is, can the mining sector actually accelerate projects to deliver into this supply gap that may emerge? So, I'd like to ask each of you, is it possible, and what impediments or obstacles have you had in your experience? So, Steve, if I can kick off with you, that would be great.
Yeah, happily. I guess you could say Hudbay is actually a bit of a sort of a touchstone for this process because of our Rosemont / Copper World involvement in what we've seen. And I think your question is good, is that when you consider the fact that the U.S. strategic metals list doesn't even include copper and its role in future decarbonization, I almost think there's almost, forgive the expression, but it's a naive point of view to think that we're not going to need massive amounts of additional copper in order to decarbonize the world. It's just a fact. There's no other substitute for it. Aluminum doesn't do what ultimately copper does. And I think as far as finding deposits, we know where they are. I mean, ourselves we have Mason, we have Rosemont, we have Copper World. We've now recently gotten access to a very prospective piece of land down in Peru. But the fact remains, it's still 7 to 10 years on your best day from discovery till production. And so you ask, can the world accelerate? I think we could, but it would take a massive shift, in my view, in the way governments and indeed other stakeholders adjudicate whether or not these projects are viable and, frankly, helpful to the world at large. I think we as an industry have not done ourselves many favors in the last few years in terms of some of our pollution. But I would argue that that's getting that is a thing of the past. ESG, particularly for us, is a business driver as much as it is a way of life. But the reality is, unless you remove a lot of the impediments towards the advancement of projects, there will be a deficit, and the consequences will be pretty nasty.
Thanks for that, Steve. Bryce, if I can hand it over to you, can you give us some insights from your experience in terms of projects and getting them off the ground?
Yeah, definitely want to echo that sentiment. I mean, like, if you look ahead, if we really want to achieve the goals we've set out in 2050 of net zero, we really have to double the mine supply for copper by 2035. And that's a big order. That's an order magnitude not seen before. And as Steve mentioned, it's really about the regulatory permitting environment. It's extremely challenging. It takes a lot longer than anyone expects. It's a process that goes through many cycles, and it's, we talk 7 to 10 years. That's your best day for sure. We're in the process of the final permit for our Florence project in Arizona, and that's taken, if you look at the previous owner, at least 13 years and counting. So, and that's some of these processes we currently have, let alone what's happening and what we're seeing on other development assets that we have, that these processes will likely even take longer in the future, not shorter. And so when we talk about critical minerals strategy, and Canada's announced a pretty ambitious program, a modest program, but a program focused on it, it's not that the industry needs capital to explore the resources. It needs governments and regulatory bodies to invest in themselves, to not sacrifice their principles, but to make the process more streamlined, to still obtain the same objectives, but to really shorten it so that we can bring on this mine supply responsibly and in the time needed, because the time is tight if we want to hit these goals. So our experience is that it takes long, and it's going to take longer, is sort of the general trend. And so we're very focused on it. But I think what that means for the market in the medium term is that the copper is going to hit record levels, and we've got to incentivize new production. So I think that's why the copper outlook, particularly for the back half of this decade, looks so favorable.
Thanks for your insights there, Bryce. Steve, you picked on something that perhaps we can expand on. You mentioned that perhaps the mining industry hasn't always covered itself in glory in terms of ESG performance, and you mentioned that it has changed. What do you think the mining industry can do to foster, let's say, a closer relationship with governments or regulatory bodies, which Bryce sort of alluded to? And just to add a second layer to that question, is there, the mining industry has tended to back off new technology. I think that's changed dramatically in the last couple of years. And, can that perhaps be a segue into both bringing on more copper, but perhaps improving the environmental footprint to improve the overall perception of the mining industry?
Sure. Look, I grew up in Northern Ontario, in the shadow of a lot of mines, and near Timmins. And I know exactly, and I actually worked in the copper business for 3 years when I was going to school. I did 3 years in a copper refinery up there. And I know where the settling ponds sit. I know what they look like. I know what they do to the environment. Of course, there's been failures on tailings dams, with the obvious one coming to mind is the terrible tragedy that happened in Brazil. But I think and I'll reflect upon our personal experiences now. Every second year, we're spending money on raising tailings dams. We've got independent reviewers and consultants looking at these things because we know as an industry, these are not acceptable outcomes. They're just not. And as a result, ESG for us has become a massive way of life. Not, again, as I mentioned earlier on, not because it's just we have to do it, it's just good business. And I think governments need to catch up to the level of introspection and analysis that we do. And again, I'll just reflect upon our experience in Arizona. It's interesting, we have a counterpart doing the same thing now. The degrees of studies, the depths, the tracing of water flows, the number of permits, but when you get into what's called the NEPA process, which is the federal process in the United States, it becomes one of, did you consult? Did you consult? Did you consult? It's not science-based. Well, it is, but it's not entirely science-based. So I think and I'll go back to Bryce's point as well, it's predictability. It's, you do this, we'll do that. You do this, we'll do that. And then we can get these things up and running. As far as technology goes, obviously technology is something we try to apply every day, because dealing with these deleterious and nasty materials rather, that are the byproducts of what we do, are something that we know leave a legacy that requires years and years and years of processing. And when I look at things like, we just redid our our environmental obligations in in Saskatchewan and Manitoba, and added some $150 million to that as we measured over 100 years of water treatment. So I think people, before they simply condemn the mining business as being the old ways, need to take a hard look at what we're doing today. Because I can assure you that top of mind here is nobody wants to be the poster child for destroying the environment.
Thanks very much, Steve. Bryce, if I can hand it over to you, and your project in Arizona is quite interesting, from being an in situ leach project. I don't know if you want to add anything on to what Steve has said.
Yeah, look, we're pursuing a very exciting project there. In situ mining's been around for a long time, and it's a big part of our ESG profile and objectives. I think ESG is used a lot, and I think what we've learned over the last few years as we start reporting ESG is that it's really about telling our story and really not necessarily first, coming up with lofty goals that have no meaning, but just being able to make investors aware of what we are doing. And for us at Taseko, we are undertaking a significant investment in copper technology. We've taken this in situ mining method and looked at applying it here for a copper deposit. It's been done extensively in uranium. It's a proven technology, and we have the right geological conditions there to do it. And what that means is we're really pursuing a different way of mining. And not only is it cost effective, it's not a significant investment. It's $250 million for us to build this, but we can also do it at some of the lowest prices because we don't have to move the earth the same way. We access the ore body through a well field, through injecting a solution and extracting it. And we do that sort of continuously. As you would in a heap leach operation, except we don't disturb the ground. We just drill into it and essentially apply that methodology just in situ. And so that's going to be a big part of our company going forward is the fact that we've made significant investment already, and we'll be building a new mine later this year as the EPA makes its final decision. They've just issued the draft, and they've reviewed the test facility that we've built there, and they're comfortable and set out the parameters in which we can operate it. So we're extremely excited in this environment, not just focused on copper and electrification, renewable energy, but also bringing forward a mine that's it's going to be one of the lowest GHG emission properties from the start. And from there, we can look to improve it further. We can look at solar power options and all of these things, which make it a very exciting time for us to be doing this. So there's definitely ways to invest in technology. It takes time in the mining industry to change. Like if we look back at Gibraltar, we benefit at Gibraltar because we have hydropower and some other initiatives, but we're starting to see announcements about electric trucks. There's a lot of exciting things going on, but it will take time for sure. And again, it's no small investment. We've invested, like I said, 12 years so far and well over 200 million to get to this stage. That's a large order for any company. So it is where the industry is going, but it does take time.
Great, thanks, Bryce. If I can change tack just a little bit, there's been quite a lot of renewed M&A activity in the sector, particularly in copper. We've seen BHP's bid for Oz Minerals. We've seen Rio consolidate its ownership, or at least trying to consolidate its ownership of Turquoise Hill. And we saw more recently the announcement of Glencore taking a bigger stake of the Mara project in Argentina. Just to get your sense on M&A, and is it better to buy versus build? And how do you approach building a portfolio of assets? Steve, if I can start off with you, if you can comment on that.
Sure. I think part of the rise in, which I think was inevitable, is a lot of these companies don't have development projects for the long term, so they're trying to restock the shelves. And obviously, they see the same things we're talking about here today. The future of copper is bright, and owning more of it is likely going to be a good trade. I think for us, the M&A is something we're always thinking about. It's very difficult to do. I, in a former life, went through an MOE of some consequence and merger of equals rather of consequence, and I know full well what it takes to do these things. But I do think the pace will pick up. The one issue I have, there's not really a lot of synergies when it comes to these M&A transactions, other than the fact that you gain additional development sites. But for us, M&A is something we look at on a regular basis, but it's not something we build budgets on. It's not something we anticipate in the future. And I think the best either defense against taken out is performance, and the best way to be looking at these acquisitions or potential mergers is in the longer term, is it going to add value to shareholders? Because it's too easy to simply, in this business, simply try to add scale for the sake of scale. But I do think it's going to be here, and it's going to become more prominent as people continue to find ways to develop these projects. And the other thing I would add is Bryce's project is exciting, but I'd say in terms of dollars, it's quite an anomaly, which makes it probably a very interesting project and a great return. Because for us, we're looking at over $2 billion in Arizona. So the size of these projects are getting larger and larger and larger. The costs required are getting bigger and bigger. And I think that'll also drive M&A, because you need scale in order to develop a lot of these larger projects.
Undoubtedly. Bryce, anything to add from your side?
Yeah, much like Hudbay, we're very focused on our existing assets. We have a very strong organic growth strategy. We don't just have Florence, we have a pipeline of projects behind it. A lot of reserve and a lot of potential there, just focusing on what we currently have. And like Steve said, focusing on performance. That's what people want to see. The other projects we have are definitely larger scale. With that, you need access to capital, and often that presents opportunities. So we're not active in M&A. We have had some successful acquisitions. That's how we acquired Florence. That's how we got a toehold in Yellowhead, and then acquired Yellowhead a few years ago. So we do look at these opportunities. These markets present themselves. We're not, like Steve said, we don't have an active M&A budget, but it's something that inevitably, I think, as we get into the latter part of this decade, you'll start to see as people try to build those scale to build these larger mines. So it's we're interested to see what happens. The majors are always going to move first. We're starting to see the first signs of that. We'll see what happens in the coming years as far as it works its way down.
Okay, great. Thank you. We've got a couple of minutes remaining. The last question that is quite prominent on a lot of people that I speak to is inflation, inflation in the mining industry. So, just two-pronged. A question is, are you seeing any signs of inflation abating? What have you done to mitigate that potentially? And, do you think it'll flow through ultimately to a higher copper price? Great, Steve, if you can give us your perspective.
Sure. No, absolutely. Inflation's real, and it's sticky. While we are seeing some abatement of things like fuel and other consumables, explosives, molybdenum, grinding media, people, all those things are conspiring to drive up our costs, and that we've had some success in terms of managing that. But there's just realities you can't avoid. So yes, inflation's real. Does it translate into higher copper price? I don't think so. I think what should translate into higher copper price is the stuff we talked about earlier on, which is the inevitable demand, the need for it in decarbonization. There isn't a great substitute for it in any way, shape, or form. And just the inevitability of the growth in consumption, if we're going to do what we say we're going to do, argues that the price should rise. But no, I wish it was correlated to inflation, but so far, no luck.
Okay, great. Thanks. Bryce, in the last couple of minutes we have, any thoughts from your side?
Yeah, I like the word sticky because that's definitely what it's like sometimes. Like, obviously, when copper price first rose there, our costs didn't to the same degree. And you enjoy a period where you're making a good margin, but the costs do catch up. They always do. And now, as copper's pulled back, we're seeing that the costs haven't to the same degree. So there's definitely that stickiness there. I agree too that what's going to drive copper price here isn't so much inflation. I think it's going to outperform inflation. I think what's happening in the market is it's really going to find a new level here to incentivize this production. We have a lower grade deposit in Gibraltar, so we're sensitive to it. But the outlook is going to be more than enough to absorb any cost inflation that we're experiencing in the medium term. So it's really going to be driven by that, the need to bring on new supply, and that's, I think, the biggest part of dealing with the inflation topic. So I think we're very comfortable that we can cover our costs. That's what miners have to do. Is you have to be able to perform and show cost discipline. We're very successful with our Gibraltar mine, having run it now for over 16 years since we took it over and rebuilt it, that we can survive through the cycles. And we're currently going through a pretty dramatic one yet again here after the COVID first hit us. And costs are definitely high, but we're taking steps with our new project to average that down. And again, I think copper price will take care of itself because we're heading into a market in the mid-2000s with the Chinese boom. That was such a great time for copper. It reset itself to a new break-even level, and we just got the taste of it earlier this year when we broke $5. So I think that's really where the market's headed in the coming years.